When I started in the business, it was definitely more face-to-face, definitely more networking, less online. So it was really a lot of just belly to belly, going out and talking to realtors, visiting offices. I would go and drop off flyers. I would go and drop off different things of like programs that we offered, just because I didn't really know what else to talk about. And there are definitely some things that you can still do stuff like that. I mean, if you go back even further in our business, a lot of people would go and like print out their rate sheets, and they would go drop off rate sheets and or fax rate sheets to people's offices. Then it was like dropping off donuts and different things like that. So not only with the fact that a lot of real estate companies are doing kind of setting up their agents to be able to operate virtually. This was even before COVID, where their contracts are scanned, they're sending them in. And then a lot of times they're meeting with clients at Starbucks and at Dunkin' Donuts and at the property. So it's kind of hard sometimes to get agents in the office, whereas 20 years ago, they were all in the office. You can try networking events. So if you look at your local community, a lot of times if you look at your local association for realtors, a lot of times they'll publish meetups, or you can go online on Facebook and follow their Facebook page and find out what local events are happening with realtors in your area, and go to attend those networking events. And just let them know that you're a loan officer. You're just looking to make some new relationships with some new realtors or some agents in the area. So it's just a numbers game when it comes to networking. It's like shake as many hands as you can, ask that question. You can make some small talk first, and then obviously you want to work that question in so that you can get to the yes or the no. And then you already know your answer, how you're going to answer it if they say yes, how they're going to answer it if you say no. You're going to exchange business cards. I have some other cool things I'll share with you regarding that. I have an app that I use where, Simple Nexus, you can share your app right with them. And so the app will sit on that realtor's phone. The other cool thing that you can talk in conversation is say, look, can you give me your business card? I would love to follow up with you and send you my contact information. And then what you're going to do is you're going to create a Simple Nexus, like realtors, you can set up a Simple Nexus like relationship with them so that you can give them an app that they can save on their phone, and then they can share that with their clients. So that way, if they want to pass your information along, they share it, but they're already co-branded on that app. I would always rather do it that way, like follow up either with an email. I also have it looks just like this, and it's a QR code, and they can scan it, and it automatically downloads all your contact information onto their phone as a contact. If you are going to do the business card thing, don't give them the business card, because a lot of times they're just going to throw it away. So either have them scan the QR code, they'll think it's really cool, and it'll kind of show them that you're ahead of the curve when it comes to technology. And then you can always follow up also with the Simple Nexus app, because again, that's going to show them like, wow, like it's got a whole app set up, and it definitely presents you in a certain way. The other thing you can do is start calling your contacts, anybody that your friends or your family in your phone, go through your phone, start making contact with people. This is really what I would do. Like if you want to start like grassroots, like really basic down and dirty, this is probably going to be your best strategy. It's kind of like when you're newer to the business, usually it's like ready, aim, fire. I will give you some basic stuff, right? So one is, we're a direct lender. So, and what does that mean, right? So a direct lender means that we close and fund loans in our own name. We still broker some loans. So on some of the specialty type programs like bank statement loans or no income loans, asset depletion loans, foreign national loans, like there's some type of loans that still have to broker. And then when you broker something, they underwrite the loan, they close the loan. So you do lose some of that control. But for all the traditional type of conventional loans, FHA loans, VA loans, USDA loans, all those we do in-house. What the difference is between that and a broker is that we control the whole process from start to finish, right? We have our own in-house processors, our own in-house underwriters, and our own in-house closers. Right. So that's one thing you want to talk about, is that we're a direct lender and that we control the process. And really what that means is we control the experience of the buyer and of the realtor. Just in general, you want to know the difference between a pre-qualification and a pre-approval. And then we have a third option. So generally in the business, a pre-qualification is the borrower gives you information. This might have been on your test, but the borrower gives your information verbally and you issue them a pre-qualification, but you haven't run their credit. You haven't reviewed their income or their assets or any of that stuff yet. That's pre-qualification. Generally, you don't want to do like that. You don't want to do it that way. Like you don't really ever want to tell somebody, yes, they can go out and purchase a home if you haven't reviewed all their stuff. And not because buyers are liars, it's because they don't really necessarily know sometimes that what they're telling you isn't the case, right? They didn't know their accountant had a bunch of write-offs on their tax returns, and now all of a sudden they don't actually claim the income that they say they have, right? There's things that can go sideways. So that's pre-qualification. Pre-approval is that you've done all your due diligence, right? You've ran their credit, you've reviewed their income, their assets, their credit, you've run the automated underwriting system, that's DU or LP, and you've determined how much they can afford. And then you give them a pre-approval letter, but again, you've reviewed everything. So that's like the next step up. And then the final step, which most companies don't offer, but we do, is what we call our Almost Home program. Almost Home program is where you do all the same things that we just talked about, but then you're going to send that loan, or the processor is going to send the loan into underwriting. And even though you don't have a contract, right? Even though you don't have a property yet, the underwriter is going to review. So the difference between a pre-approval and the Almost Home is the pre-approval, you're reviewing everything. And in the Almost Home program, the underwriter is reviewing everything. Because as much as we all want as loan officers to be the end all be all of the answer, we're not. The underwriter is the person who really puts the stamp of approval on it to know that they're good to go. And so that's the strongest of them, is the Almost Home, because the underwriter's already reviewed everything, they're good with it. And you also, once you get a contract, you can process that loan much quicker because we already have an approval. It's a good approach to use a tool like that because it helps you deliver information in a concise way that they will understand. Before you use the debt consolidation tool, you want to make sure you're asking the right questions. So what I would do is, if once you do get on the phone with people that, let's say you're calling people through your phone, right? You're just going through your Rolodex and you're just saying, hey, let me just call everybody I know. Let me go through my friends on Facebook and just, start finding people, whatever that might look like. You want to get a series of questions first that you want to ask. And then you want to then go separate from the conversation, go and plug them into the tool on MBS Highway, and then go back to them with your summary or your recommendation. So I think the real question there is, I do think the tool's great, but I think the question is, what questions do I ask to somebody when I have them to see if it's the right thing for them? Because it's not like, you don't need to necessarily go after refinances. You need to uncover opportunities, because you just need to find out if they have a need or not. And they might not know if they have a need or not, because a lot of clients, they've already refinanced. And so they might not have a higher rate, but it's not always about rate, right? So if you go and talk to somebody, if you ask them what their car payment is, a lot of times they know what their car payment is. But if you ask them what's their rate on their car loan, they might not know, because it doesn't matter, right? What matters is, what's my monthly payment, right? Like you're making the payment based on the payment, like the rate is a byproduct. So when people are like, it sounds nice at a cocktail party when you're talking about rates to say, oh, I have a, 2.5% interest rate. Well, that's fantastic. But if they have credit card debt or student loan debt, or they just put a pool in and took a pool loan out, or their kids going to college and they just, they need money, or they need to do a home improvement. Like, it's the cash flow that's important, right? It's how much money do you bring into the household and what are your payments out of the household, right? And then what's the gap in between those two things? And that's how much money you have left over every month. And you want to try to have as much money left over every month as you can. So the idea is to start asking questions to start uncovering needs. Ask good questions. It's good to be knowledgeable, right? It's good to have answers, but you'll be more successful if you have good questions versus good answers. And a lot of people don't think that. So it kind of goes back to, if you're at a cocktail, or if you're at a realtor event, networking event, ask questions. Do less talking, ask more questions. And sometimes, like, when you're nervous or when you're insecure, people tend to overtalk because they're nervous, right? And so they want to sound smart. Or they don't want to sound like they're newer to the business. Or they don't want to. It's like, and you don't need to do it. So just ask questions. I didn't really start putting a plan around things until probably 2012 when I really started getting involved in coaching groups. And then they started framing things for me the proper way so that I could start dissecting where I should be spending my time. You know, now I do have, it's called a daily success plan. So it breaks down my day and the amount of time that I need to be spending in each place. I would say I need to prospect 2 hours a day, and I would sit down and I would put my timer on my phone, set my alarm, and I would go. And I would start either making calls, or I would start going on social media and finding realtors, finding groups, start talking to people within the groups. There's so much business to go around, and you don't need to do that much business to have a super successful business or career in this industry. And you could be a blip on the radar for anybody else, but be making a significant earning income, for yourself. When you go in and you start looking at your business and where it comes from, you can look at any loan officer, and I've done this. I did it in a room full of loan officers. I would tell them, give me the name of any loan officer you know. I'll pull up any loan officer, and I can assure you that premise that I'm about to tell you will hold true for anybody. I don't care who you are. 99% of your business, 95% of your business is going to come from a onesie, twosie realtor. When I say onesie, twosie realtor, that means a realtor that gives you 1 or 2 closings a year, and that's it. Very few realtors, and I call them your unicorns, are going to give you 4, 5, 6, 7, 8, 9, 10 closings a year. Very, very few. And so when I pull up loan officers doing 60 million a year, 80 million a year, 100 million a year, I don't care how much you do. That rule holds true for any loan officer that I've ever pulled up. You're going to have your 2 or 3 unicorn realtors, and then all of your other realtors are going to give you 1 or 2 deals a year. That's it. Whether that's all the business they have or it's all the business they give you, I don't know the answer to that one. It's different for every realtor. It's just what it is. And knowing that is contrary to what a lot of these coaches would teach you, because I paid a bunch of money to go talk to these coaches, and I learned a lot of really good things. I love coaching. Like, I think, spending money on coaches is some of the best use of my money I've had, because I've learned so much. But one of the things they would teach me was, go meet with these big producing mega agents. You're not going to have a lot of unicorn realtors. You're just not. So you have to talk to a lot of realtors. And whether you talk to them by doing webinars or going into groups, however you want to do it. So don't get hung up on getting a no. You're going to get more no's than you're going to get yeses. That's okay. And you got to talk to as many realtors as you can. The more realtors you can talk to in a shorter amount of time, the more business you'll do in a shorter time period. It is just a numbers game. You're going to have to deal with all the onesie, twosie realtors. So you have to have a lot of realtors in your sphere to get those 1 or 2 a year from each one. You want to start building that database of realtors. So always try to use that, whatever call you're on, always be thinking, how can I take this one call and multiply my future calls? And if you have that mindset, it'll just mushroom. Like it'll explode. The more time you have to prospect, the better off you are. And then there's going to come a time where you're going to have less time to prospect because you start getting busy with clients. And that's where you have to be very protective of your prospecting time. And you have to be very, it's like anything, like you have to be disciplined to stick to that time, because everybody else is going to start having a priority for your time. Right. And you have to protect your time, because your time is time you need to spend building your business. And if you don't protect that, then everybody else will take advantage of your time.